Hi, this is the Crypto Dolphin. You might have heard of me before. I'm just going to do a review of the market, and I want to see some one interesting proposal from one of the community members from the Lunatics and the Terabytes community. Um, I just want to review this, and I'm going to start creating some content. So this is just like a first stream, and I wanted to cover some important things, right? First of all, I want to cover a little bit of the current market as it is. Um, I personally am not bullish at this precise moment. I can show you more or less what my analysis are and why do I see things the way I see them. As you can see over here in this chart, this is a daily chart. I use various different charts to review everything in the market, although mostly I do my day-to-day analysis on Coinbase, right? I've marked okay, if I take the log out, I've marked the different the fib settings for the previous cycle. I'm currently doing the analysis on this cycle that has started and I want to see everything that has happened in the previous week, right? So just for the record, like I mark the yearly opening, February opening, March opening, April opening, because it gives us some good idea of where we might be headed as a whole. Right. So first of all, this is BTC USD. We should start from total crypto market cap. Just to review what has happened, because it gives us a better idea of what's happening and what has happened before. You can see I'm not using the log chart because I when I'm analyzing macro stuff, I get a much better sense simply just like checking on without log, and when I'm doing more continuation or lower time frame settings or not so macro analysis, I use the log. Um, okay, so over here we can see in the total crypto market cap that we lost basically in the last week from the top, or basically from the top that was on 12 May until now, we basically lost $1.38 trillion, which is equivalent to 53.60%. We've seen losses like this before in the market on previous cycles. We could actually measure that over here. Oops. Allow me to take this out. So we could say we could measure much easier. This is January 2018, and this fall will be equivalent more or less to this one, right? Actually, technically, it could be more like over here, because we unlike the last time, like when we lost 50%, we lost it in one whole move. Uh, Unlike last time that we lost it on a few movements, right? Not entirely on the first one, which is not the case for what we've seen now. So we saw a move like this, right, where we lost 50% and it marked a steep decline and basically the end of the bull cycle as we knew it back then. Just compare what happened back then, right? But we've never seen something like this without any sort of relief so fast. So this is what I'm measuring right now on the crypto total market cap. And well, it's just to say that in what, almost like 2 weeks, less than 2 weeks, we lost $1.38 trillion. I threw a Fibonacci retracement, and we saw how it's been reacting like perfectly by the book, creating unfortunately lower highs on a daily time frame. It has bounced like a magnet. It usually bounces like a magnet, looking for the middle, the middle of the retracement. Then we retested the bottom, and now we've been getting rejected at the 0.618 retracement, which is usually the golden pocket. Personally, I'm de-risking on alt exposure for the time being until we either get like a bottom confirmation over here or over here, and we start creating like higher highs and higher highs and higher lows, or until we bottom out, right? I'm expecting we get some heavy ranging, and we might get some alt movement within it. On the long term, you shouldn't be worrying about anything if you're carrying good good alts. But on the short to mid term, you should be perhaps de-risking a little bit, right? So don't go doing crazy stuff. And if you lost a lot of money on these past like 10 days, please don't try to make all your money back in one movement. Revenge trading will only leave you poor, actually, because you'll start to leverage more, and you'll get liquidated easier. And to make up for a 50% fall, you would need to have like 100% trade, right? So you start getting greedy, and usually it ends up in a bad sense. So in a bad position. So just doing this retracement, I've settled my thesis on why I'm de-risking on an alt exposure right now. This is for the total crypto market cap. Now, if I go to dominance, right? I can go to dominance right here, and we can check when BTC dominance is falling. Is usually when we get the fabled alt seasons, right? So you can actually see how between January to February, we had an insane alt season, right? When we were falling in free fall. And then back in March, April, things started to top out, and we started to not move it as much. I saw people getting frustrated. The first movers in the year started to stall out a little bit. Then other things started correcting. This is normal, and this is a level that back to look for. And then after that, we got another alt season, which marked the decrease from 60% dominance to 30-40% dominance. I had marked this golden box before because this is where we bottomed out last time, right? That's what happened back in January 2018, which started to mark the end of a bull cycle as a whole. It doesn't mean that alts are not going to grow, but it means that BTC starts getting more protagonism for various reasons. So that's why I mark this area over here. I know it just looks in hindsight because I'm not sharing my analysis every day, but I'm planning on doing that more often, right? So you could see, let's go with EMAs, take out Ichimoku, just EMAs. We can see how we had another alt season. It was over here. It was mostly like shit coins. Actually, it wasn't that much in like the good fundamental coins and so on. It was more like Doggy, Akita, Shiba Inu, Safe Moon, and all those TikTok influencer coins. And this is the point I'm marking, right? So over here we saw how BTC dominance flew right through 50 EMA on daily candles, and it just bounced from there, which is giving us a sort of a relief pump, and that's why more money is coming into alts right now. This could be continuation, and we might perhaps go even lower than before, because as this grows in an exponential wave, more and more people are in the market. We might go even lower into the dominance chart, but I'm still on the lookout for everything that's happening into this golden box, right? On the other hand, we can also check index. The indexes that I usually check are the FTX ones, so we can check altperp. Altperp, I'm gonna look at this in line charts and not candle charts, because they usually give us a better idea of like market structure. So over here this is where we started creating lower highs, and we haven't yet seen much. This, if you've seen it before, is very, very similar to the structure that we see on the Wall Street cheat sheet. This is also typical Wyckoff distribution and cycles. So we could say more or less that all of this, let's take out the magnet, all of this is more or less accumulation, right? In hindsight, right? And this is accumulation. This is from 2019. We saw sort of a smaller rallies. If we zoomed in, we'd see smaller rallies that only took us to where we started back in July 2019. And this is all accumulation phase over here. Accumulation phase. Then we get a small spring. This would be actually the spring. The spring volume for everything that came afterwards. We broke down. We get a reaccumulation, or a markup, if you want to use the Wyckoff terms. And then we start seeing a good move, like very exponential. We getting higher highs, higher lows, and just moving up. And then we get to this point over here, which was the local top. And this is where we are right now. I'm not expecting us to jump right over it. Like this space over here is probably where we're gonna range on alts if we're gonna have continuation. This is a deviation over here. Let me get the pencil out. So this is a deviation over here. This is a deviation over here. And I'm expecting us to basically range all over this place for a while. Because this was heavy resistance as far as alts go. If you want to check the different alts that make up the index, the index, you can check the FTX index. You can Google that, and just check it out. DeFi perp. I wanted to see DeFi perp. Usually check this in logarithmic scale, because they've had like exponential growth, so it only makes sense to use logarithmic scale, right? This is a bearish pattern, pennant, and that's when I started like de-risking out of the DeFi blue chips like Aave, SNX, and all of those. We saw a huge fall over here. Usually what tends up happening is that we get from no, that's not the one I'm looking for, sorry. So we get the price range from here to here, and then that should be more or less what we get from here to here. It was less than that. It's also because this line, it's a little bit higher than it should. So yeah, it's more or less from this point on to down. It's basically the same fall from this. This is just TA, right? And that's where we ended. It's not a coincidence. So that's where we finished our correction. And right now, after, as in any fall that we have that is significant, we get like a retest of that price. We try to get a retest of that price. I'm expecting a lot of resistance or ranging over here. If not, I'm gonna wait for the SNR flip over here or here, right? What's an SNR flip? That's when we get a support made resistance or a resistance made support, and we start making, so we either go from here and we start to range over here, and then whoop, and then we get to range over here, whoop, we get a deviation, and then we start ranging again, and boom, right? And until we don't get this over here, or until we don't range to this spot right here, I'm personally not moving into alts unless we on DeFi alts until we get that. That's just a personal opinion. I'm just trying to do the move in the safest way possible, trying to de-risk. You should know I'm a trader. I got a few long-term positions, one of those being Luna, and because of everything that they bring and the opportunities that it provides. Besides, I really like the community, but this is just my thesis, and I'm trying to explain how I'm moving, right? Okay, so now we can check the shitperp. Shitperp just shows us different shitcoins. You can check the index on FTX to see what coins make it up. It's obviously highly represented by Doggy, Dogecoin. I don't know. Nowadays people call it in many ways. We get exactly the same thing. We get a retest of the first spot, which is at a resistance, right? This is a deviation over here. This is a deviation over here from this, from the range that we're starting to create, which in my opinion is more or less over here and over here. So I'm expecting some, if we are gonna continue, and I think we're gonna continue, I'm expecting us to range over something like this, then like this, then like this, then like this, then like this, and we might get some deviation to the downside to clear some certain degenerate longs of people that are longing stuff when they shouldn't, and then some more ranging over here, and then we go up, start creating some similar structure, and boom, right? And same thing over here. Personally, I wouldn't go into any shitcoin unless we beat this space right here. On the other hand, if you check this on weekly candles, this is almost a perfect cycle, Wyckoff cycle, just like 1, 2, 3 waves, just like it should be. This is how cycles work: 1, 2, 3 waves. You got the complacency shoulder, which actually was higher than the top, the what we usually call the top. Maybe we have a complacency shoulder over here. and that's how we've been moving. I'm personally not taking any position on shitcoins unless we beat this place over here, or until we start bottoming over here, right? To get a bounce, because I'm expecting some ranging. Okay, that goes as far as general market. I think that's good enough to see where my thesis lie, and just wanted to show you how I see stuff. Then we can see on the macro, we get logarithmic, right? This is a chart that I've been using since more or less 2018. I started doing it and using it back when back when everything started to fall. I just created a pitchfork, marking all the tops and the bottoms, and I took the mid April super mega pump on 2013 as the median of the pitchfork, right? So far, it's been absolutely amazing. It's been tracking everything on weekly candles, and I'm thinking in this cycle, we're gonna get we're more or less in this same moment right here, or that's what I was expecting as a whole. And I don't think we're topped so far in terms of Bitcoin, right? I'm not gonna show you where the different targets lie over here, because this is just an extrapolation of the same movement that we got here, and the numbers are sort of insane, so I don't want people to get like over excited over it. This is just spaces where I'm expecting the kind of tops, the actual tops to come. I'm thinking we might repeat like January for BTC. We might get something like that. And as you saw in the different charts before, when BTC tops, we also get blow off tops on alts. And there's something that you must know as far as liquidity goes. Tops are never made on bearish sentiment. They are never made on bearish sentiment, and there's a reason for that. If you want to exit a big position, you cannot exit a big position on bearish sentiment, because you will drop the price to the floor, which in exchange will give you a horrible rate, which you don't want to, right? Because you actually want to get the best price possible to leave your position. That's why if you're a whale, you sell on green and you buy on red. You do not sell tops, you do not buy bottoms. You are the bottom and you are the top. So that's why tops are always made on euphoria. And not ever made on bearish sentiment. So that's something positive to take into account. Obviously, as more and more people join, this is similar to any adoption curve. That's why I take it in logarithmic scale, because it's exponential, because more and more people are getting into the market, and that's why it might take more time, and things start to move a little bit more, and we start to move in little waves. Like this could be a first wave, a second wave, and then we get like a big wave, a big third wave. So okay, this is more or less what I've been expecting. It wouldn't surprise me if we get a small retest from the previous tops, although I'm more expecting to be ranging within this same range over here. Like this range we had over here from January or late December to March, more or less, to February. This is the same range I'm expecting to have over here, right? And then we can continue over. This is also normal, just so you know. Like if you check May on like summertime, May to mid July, is always bearish. You can see this. Can you see this? This movement over here. I'm expecting a similar move over here. If you see this over May, right? You get May, and then we got until June, July. But okay, like this is a different cycle over here. But if we get, oh, okay, here's perfect. So we get May, boom, 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 boom. We drop until July, and here on July we get all of this on mid-July, right? And this was this cycle. I'm expecting a very, very, very similar thing to what we had in the 2013 cycle right now. So this was the local top, and look at it. It's just exponential projection over here. So we got a local top over here, and I'm expecting to have a blow off top similar to this. I'm not expecting much movement on everything until mid-July, actually. That's why we always say sell in May and go away. There's a bunch of reasons for that. Tax implications, which are usually made for companies back in that moment. Also, this year, everything got moved a little bit until May. So a lot of markets move in that way because you also start getting the fiscal year, right? So you start accumulating on the fiscal year, and then you ended on April of the next year. So it's got its reasons, but I'm not gonna go over it because that's a lot of theory over here, and I'm trying not to make this as long as it could, right? So okay, I think that more or less covers what my idea of the general market is heading, and what we might see, what we are gonna see over here. Maybe let me get this chart over here. Yes. So this is the daily candles. This is the chart I'm checking right now. I'm expecting to have more or less the same kind of structure that we had over here. This is the Elon candle, when Elon announced everything, that we went crazy from 38 to 47. Like that's insane. Look at that candle. That's not normal. Like almost all body, almost no wicks, super hyper mega green. And then we started having like this this structure over here, which is not a bullish, right? That's how I figured that we'd be hitting 42. That's exactly why I figured that we'd be hitting 42, because I just did exactly the same thing that I did back that I showed you guys. So I measured over here. And then I just like moved that over here, and I assumed we were gonna hit 42 and we were gonna bounce back, but guess what? We didn't. We didn't hit it. So as we didn't hit it, I started to de-risk a little bit and started selling stuff, some things at a loss, but on a much less of a loss than I would have if I had held until we hit 30. Right? Because I knew as soon as we broke that, I started shorting stuff as well, because I knew the structure wouldn't hold, right? This is the range I'm expecting. I got a Fib retracement over here, which I think will mark our range. This is where I'm expecting moves, right? We've been seeing how it's been responding to it. Right now, it's been working to a T. It's getting to oversold levels on daily candles. So I might check it on a weekly basis. On a weekly basis, it's extremely oversold, which is positive. But as you know, it might take weeks to actually make this a bullish cross. And even if we do, we might get this case over here, where we simply did like a small bounce, boom, which was this. So we can still go a little bit lower, right? So this is daily candles over here. This is all the March opening. This is the spot that I was expecting it, like 43 to 42. That was more or less the spot I was expecting it to hold, but it didn't hold at all. As you can see, it did have a bounce, so I was not the only person expecting that. It did have a big bounce over here, but it ended up falling down. It didn't hold, and then we started getting like more and more and more until we started creating actual higher lows over here, right? So this is still like where I'm expecting it. This is where we were ranging before the Elon candle. I'm expecting some fall over here. Not gonna lie, and I'm expecting that to be reflected on different alts. Okay, so what can we do, right? This is what I'm seeing on the market as a whole. And how will these react? What can you do? I'm personally very excited to use synthetics, exposure to not leave the things that I'm already doing, and make the best out of it. So in that case, we got different synthetic platforms that we can use. We can use FTX synthetics exposure in more than one way. I will teach you about that a little bit later. We can also use SNX synthetics from the Ethereum DeFi blue chip suit, and we can actually use my favorite, which is Mirror Protocol from the Terra network, right? Over here, on this basis, I've been seeing a lot of news that we have to see. So over here, we can check that gold at Bank of Europe commands high premium, signaling central bank buying, right? That's, that when banks are buying gold, that's because they can smell the fear. It has a lot to do with the current market structure, current market things happening, the rates going up, a lot of the financials going public, a lot of companies just showing how much they had, and they had to do on taxes. So that's something to take into account. Here we got our Reuters. We also got an update on China's April net gold imports via Hong Kong near 3-year peak. So this means that Europe, China, more China, but also America is hoarding all the gold that is possible, right? So what can we do? Well, we can actually check gold, how gold is doing, right? We see how the gold structure is moving right now. This was the bottom back in December 2015, a local bottom if you want to call it that way. We've been moving to a local top back in August 2020. It's obvious due to the pandemic and whatnot. Then we started getting like a lot of easing. This is exactly the moment where we get quantitative easing and stimulus and all of that, right? So we started getting higher, lower lows, lower highs, lows, lower highs, and so on. And then we made a bottom back exactly at the moment where the pandemic started, right? And this always happens. This always happens whenever we have some kind of black swan event. Gold always reacts in the same way. That's why I always tell people, when crisis happens, you should not pay attention to the first year, but to the second year. Everything always happens in the second year, right? This is where COVID happened, and this is the bottom that we made, and we've been bouncing from that spot ever since. We've been hitting, and we actually broke the mid-range, which is actually a good thing. We'll see where it bounces, but I'm pretty sure that we're gonna see like positive positive movements on gold. And it's not a coincidence that all of this is happening. And it's not a coincidence that this happens exactly the moment where a BTC basically goes haywire, right? So this is the day that we had the black swan on crypto, and that this is what's been happening ever since, all of this over here, right? So that's as far as gold. If you want gold, you can also have silver, right? And on silver is looking even better. Like, we're getting a range over here. We trying to break this. Let's get a fib retracement over here. You're getting I'm gonna call it over here, and maybe over here. Yeah, I'm gonna call these ones deviations, or we can actually extend it over here. Yeah, much better. These are deviations. These are deviations on the top of the range, and this is where we are moving, right? And I'm expecting us to have, it's basically very oversold. It's very oversold on the daily. I'm expecting us to, let's see, yeah, it's bullish. Like, we had a bullish cross right here over on June 2020 due to COVID. If I check gold, it's gonna give me something extremely similar. So no, gold has been very bullish since January 2019. But it almost crossed bearish before starting 2020, which is when COVID was actually known to the financial institutions and the governments. So it shouldn't be strange that other markets lag against gold, right? So that they know first, right? Okay, so hey, I want to get exposure to gold. I'm in crypto. I'm in a country where I cannot buy gold unless I'm a billionaire. What can I do? Okay, why not jump into the Mirror protocol? So I'm gonna check here over in the Mirror market, which is an interface that everybody who's basically using anything regarding Mirror on the Terra network should be using. You can see the TVL, the total value locked. You can see the Massets market cap. We can see how big Mirror is, what price it is trading at. The 24-hour transaction, we're seeing that we've been getting 31,000, almost 32,000 transactions on Mirror. The collateral ratio that it's keeping community pool balance, we get the 24 hours fees. So just in the last 24 hours, we get 1.74 million UST. Damn. And Mirror has the cheapest transaction fees of the whole market of synthetics and the Terra network itself. So that should be eye-opening, right? We can see how Mirror has been moving, how liquidity has been moving. We see the liquidity on Terra has been going down, but it's been going up on ETH at an accelerated rate versus on Terra. I'm not exactly surprised at this, because there's a lot of institutional firms doing a lot of trading over here. So it should not come as a surprise. This is the volume that we've been moving at. You can see just tickers and what's been happening. This is a market overview. We can see what are the top gainers. Of course, this is on a daily basis. We see AMC, just you know, AMC and GME and all of these companies that Wall Street Bets guys are moving. They're like the Dogecoin of the of the legacy markets. But if we go on a weekly basis, I'm expecting gold to be here. 3 months. Okay, it's not happening because it's not. This table is not being referenced on as I wanted to. But the same, anyways, like we should see like gold, and it was presented before yesterday, before today, that everything went like insane. Gold and silver were on the top losers, um, most active. You can see like all the different things over here. Alibaba is moving quite a lot. I was not expecting that, but that's good to know. And here we get the top pairs that are being staked on the pools, right? This should be interesting. Okay, so we get the Mirror USD is obviously gonna be the top one because everybody that is doing everything, they just take their mirror and they put it on the pool, right? Like, why not? Just get more and just sell when you need to, which also creates some sort of inflation. But yeah, it's okay. Then we get silver. Why? Because silver was looking very bullish, right? Then we get QQQ. If you don't know what QQQ is, it's an ETF that tracks the Nasdaq top 100, and basically is very focused on tech stocks. More or less 50% of the ETF is represented in tech stocks, which usually do very good. Apple, Microsoft, you know the deal. You know which ones they are. Facebook, and so on. Google. And then we get Google. Of course, we're gonna get Google. And then we get gold, right? So we get silver and gold are in the top 5. And we get QQQ, that's also in the top 5. Then we get Apple, Google. You shouldn't be surprised. And if you want some Asian market exposure, well, you get Alibaba, right? You get Amazon, US Oil, that's in the top 10. And then we get like the normie stocks, Tesla, Netflix, and so on, and Twitter. Well, Twitter is not a normie stock, honestly. But here's what we're starting to see. Okay. Yeah. Didn't want my info to be public, but okay. So we can go to Terra. We can see the impact that was had on the liquidity of everything, how everything's been moving, and we can see over here top trading assets. We see gold as the number 2. We see VIXI. We see VIXI as about futures. This is basically volatility, right? This is basically volatility, and it's been to the downside, and it's being top trading, which it should tell you a lot about what the market is thinking, right? We got ETH. It's not surprised. It's getting good, like price action. AMC. That's just moving insane. It's like the Dogecoin of the market, and you see like Amazon buying Metro Golden Mayer and all that stuff. Like then other people are gonna argue that okay, this is also entertainment and whatnot. So they're gonna try to get some exposure. We got silver, right? So I want to show you a concept of delta neutral portfolios, because one of the good things about mirror market is that it actually allows you to have a portfolio and just get yield based on on price exposure to other markets, which, if you ask me, is actually insane. Like, say you want to get a position on silver and gold, and you get a yield as a plus. You only have to collateralize with the same amount in USD, which is quite insane. So here we have a portfolio made by Daryl Brown, a member of the community who I was having a chat with, talking about having like delta neutral strategies and portfolio allocation, just in case that, okay, if the crypto market goes down, then we get to have exposure to other things, and our mirror portfolio goes up, right? It keeps giving us. It doesn't matter what happens if it goes up or down. We can still profit because we are covered by our hedge, and we're hedged by the portfolio allocations that we have, right? So this is a portfolio that he shared with us, which is basically U.S. oil, gold, QQQ, and on the VIX index, right? So you can see throughout time how it has moved, and you can see it's very positive. It's very positive. It moves all right, and even through COVID, even through everything that has happened, we've been moving in a positive sense. Why? Because one cancels the other one. Like if one is doing bad, the other one is doing good, and so on. So like I mean, if oil is going down, the economy is going down, then gold is going up because it's due to fear. If QQQ is going down, then the VIX is going up, and so on with U.S. oil. And if the economy is going good, the American economy is mostly petrodollar based, so obviously U.S. oil is gonna go up. Gold will be going down, but QQQ and U.S. oil will be doing good, right? Like these two are canceled by these two, and they can all go up on a good basis, basically. So this is what I wanted to present to you today. If you actually want to get the latest alpha on anything related to Terra, I suggest you go to the forums, Agora forums. For if you want, Agora forums, if you want to see anything related to Terra money as a whole, also on insurance, liquidity parameters, or if you actually want to make like a proposal, please do it on the forum first before trying to do like a poll that would cost you money. You will get feedback from a lot of people. Doe is very, very, very active on the forums, even more so than on Twitter, and especially more so than in Telegram. So if you want to actually communicate anything to him, like just log into the forums, and you can actually create a web app for your phone so you can access it and just use it and get notifications from everything. Like that's how I use it from my phone. I highly suggest doing the same thing. So this is Agora for everything Terra. We got Mirror, and we also got Anchor. So I wanted to check this proposal by Daryl, and Daryl brought to attention that we could actually make more of a delta neutral portfolio if we actually created a masset that tracks Oracle price of the Ethereum volatility index and the Bitcoin volatility index. Right? So if everything goes haywire on the crypto market, then we get exposure to an increasing asset on volatility. And if everything is going up or is just like moving normally as it should, then volatility should be a lot lower and it should be going sideways, right? So it basically doesn't hurt us, but if black swans happen, then we get exposure. It basically works like the VIX, right? The volatility index for the other markets. So yeah. So Daryl said, like, this index spikes when the crypto market crashes. It is the perfect hedge for our crypto positions and would attract a lot of capital to the Mirror ecosystem, which I agree completely. It tracks the implied volatility of the Ethereum options. The stock market equivalent is the VIX, the VIX, which tracks the implied volatility of the S&P 500 options. In the May 2021 crypto crash, this index went 93 to 217. If 10% of your portfolio was in this index, then you would have had lots of cash available to buy the dip aggressively or to cover your loans to avoid margin calls. See what I mean? Like this would be a perfect hedge for anything that happens. So we could create the perfect hedged delta neutral portfolio on Mirror, and you wouldn't have to leave Terra if things go haywire. You simply have to get exposure to price exposure through Oracle feeds by using mirror assets, and then you would get a lot of cash. So if everything went haywire, you could technically buy the dip with everything that happened. Um, okay, I had not seen this before. They say that a mass that can't directly follow an index due to market dynamics. But in any case, I would actually discuss this, because it would be pretty insane to have exposure to indexes and assets. But in any case, if this cannot happen, we can still hedge by going gold and going VIX, right? I'll have to check this more, with a more detailed review over it. There was also another idea that was posted in the Terabytes, podcast, Telegram chat, which included just including 10-year and 30-year bonds, because they would be like perfect as assets. And I don't think there will be any issue like getting Oracle feeds from this, simply because that way we could have exposure to older bonds, and then basically we get a more delta neutral strategies that are not as affected by short-term market movements, right? With 10-year and 30-year, we will be very, very, very well covered. These are the indices that I wanted to be included: the Bitcoin Volatility Index, and the ETH-Vol, the Ethereum Volatility Indexes. So I'll have to check that with the community and with all of us. But in any case, I'm still planning to go with a similar portfolio to this, assigning 25% to each one of these, just so they cancel each other basically, and we get price exposure. And if the crypto market goes haywire, then it's very likely then that the other markets are gonna do good, or at least we get this as a hedge portfolio to anything that happens in the legacy markets. And legacy markets are not as affected through the crypto market, so at least we get exposure to something else, and we can start creating more and actually get yield from it, which, again, this is insane. Like, tell me another place where you can get like yield just by holding a position, and I'm not talking dividends. There's something else that you must know. With Mirror V2, we're gonna be able to have to use AUST, which basically is yield producing primary that you can use to collateralize your positions on Mirror. So the Anchor protocol, the 20% Anchor protocol. Here we go. Everything that you see over here on the Anchor protocol, you might see that I got the night mode activated. I like it, but you can go with the light mode. I'm a night owl more so than a morning owl, so I always go with the dark modes. Over here, you know that you'll get between 18% and 20% APY interest on your deposit, on your savings. So you can use your money that is actually earning positive interest, your savings that are getting positive interest, and you can use them as collateral on Mirror to create your positions and get yield from a portfolio like this, which for me, I believe this is insane. And if you're an actual lunatic, if you're a Luna fan, if you're a fan of Luna and you want Luna to do good, then why not use Mirror? and profit from this. Like, I mean, we got stablecoin peg insurance from Unslash Finance, which I told you about like 3 months ago, and nobody believed me. We got ozone insurance. We got SandClock doing interesting things. We also got Unslash Finance insurance for smart contract risk in case anything goes haywire. We got Nexus Mutual insurance for your for everything that you're getting over here on Anchor. Sorry, over here on your earn on your savings at a 6%. So you would actually get between 12%, from 11-12% to 13-14%, more or less. Savings yields, insured savings, which is insane. Tell me what bank offers you that. And you got insurance like from the top insurance companies in crypto, which is on Slash Finance, which is basically B2B. So that's why you don't get much covers, but you can get price exposure to the actual protocol. And you get Nexus Mutual, which everybody can use, and which is more B2C oriented, and you can actually, as a matter of fact, we can check that. Nexus Mutual Anchor protocol cover, right? Should be Nexus is growing. Protected yield opportunity for the Anchor protocol. Right. So you see, so we get 6.79 AP like interest rate over. So basically, let's round it up to 7%. So you would get in the worst case scenario, you would get from 11 to 13% savings interest. That's insane. Tell me what bank gives you that? There's no bank that gives you that. And then we got Unslash Finance. Unslash Finance. No, I'm not gonna connect anything. This is not what I want. I don't want to do that. Okay. Anyways, Unslash Finance is more B2B. So it's basically Terra doing contracts with them, and they get the cover from it. And Nexus Mutual, crypto, Nexus Mutual IO. Nexus Mutual is you can get cover like for different for different things, and you can get cover for Anchor, for your Anchor savings. So if you think that things are going a little bit bad, a little bit haywire, you can still keep your Luna. You can maybe deposit your Luna as I know people are not gonna like it, but perhaps you can go on Anchor, provide some Luna over here, or on the upcoming Mars protocol, you could perhaps just provide your Luna as collateral, get a loan with very, very, very safe settings, and then put that loan over on Earn, right? And then the loan you have in UST, you use half of it to get positions in Mirror, and the other half of it is just gonna be used as collateral. So you could basically be hedged and be creating yield and be having money even throughout like the worst case scenario, which is markets going haywire, crypto going haywire, and you would be creating UST demand. So I think that's all for today. If you like this, please let me know through the comments. I am gonna do the spammy thing of click like, comment, and subscribe. Let me know if there's anything that you want me to cover. I'm just like I'm a trader. I'm a trader. I'm starting to become a builder within Terra related protocols as well. And yeah, that's that's more or less it for today. I hope you've enjoyed this. If you got any constructive criticisms, just let me know. I'll try to make the best out of this. And guys, just play it safe. Don't be dumb. Please don't be dumb. Don't be bullish at resistance and bearish at support. Don't try to revenge trade and make all of your losses back in one move. Don't over leverage. As a matter of fact, if you're new, don't leverage. Uh, Trust the process. Trust in long term companies, and maybe perhaps you could use this strategy. You could use this strategy, and by using this strategy that I've just shown you, you can be like me and generate money throughout massive bear market of both legacy markets and crypto without leaving Terra. So, yeah, I hope you've enjoyed it. See you guys.